CoreWeave and Nebius beat on earnings, producer prices are going down, inflation stays steady, and then next week we got the major retailers reporting along with Home Depot, and then to wrap it all up we got the manufacturing index. Let's talk about it. The NeoClouds reported, and it shows what I said before. Beats and raises across the board, with CoreWeave able to triple their backlog and Nebius able to quadruple it. Both reporting that a majority of new contracts signed come with prepayments, and that these prepayments then go on to fund up to 50 or even 60% of all new data infrastructure being built out. With CoreWeave aiming to have 8 gigawatts of capacity by 2030, about 5 times what they have right now, and Nebius trying to 10x their current capacity, it's so important that they're not taking on as much debt as they have to in order to build out the capacity. Now they don't have to dilute their shares or to raise money through bond sales. And I forgot to touch upon this last week, but it was really important that both of these companies showed good earnings, mainly because they serve 2 different customers in the AI race, with CoreWeave supporting the hyperscalers and Nebius focusing on AI cloud infrastructure and token platforms, mainly based in Europe. But not everything is all well and good in the AI race. Nowhere will you find a better example of this than Applied Materials, who didn't beat... Wait, hold on. Oh, no. They just didn't beat enough. What the fuck? They didn't beat earnings by enough, and the stock went down 6% for the week. So did Cisco, which failed to live up to expectations and also fell 8% for the week. Now, what really powered us to record highs this week was the CPI and the PPI report. Now, the CPI came in within expectations, but what really surprised investors was the producer price index, which came in a lot cooler than expected. The PPI was able to bring down the annual rate to 4.7 from the high of 5.5 in June. 4.7 still seems like a lot, but the fact that the number is going down gave investors the confidence that in the future, it looks like inflation might be going down. And if that's the case, we don't need to worry about a Federal Reserve hike. Everybody just starts spamming green arrows. We're going to AK with this one, boys. If you watched the last video on the channel, you might be familiar with the phrase trade down. And that is the narrative we're going to be looking at next week when we see Walmart, Target, and TJX companies reporting. And what we're looking to see is if Walmart and TJX post strong comparable store sales, while Target, it shows some softness in categories like, clothing and home decor, then that confirms we're still in the K-shaped economy, where consumers aren't really worried about where they're shopping, they're worried about whether or not they're getting a good deal. Walmart specifically is seeing a large amount of consumers that come from households that are making over $100,000 coming into their stores and getting a deal. Same thing with TJX with the back to school rush, trying to get, backpacks and clothes for their kids. And with Target, they are not really a beneficiary of this. So expect to see same-store sales, if not improve, maybe even decline, due to the fact that they are not priced for what this consumer is looking for. And to get more insights on what consumers are feeling about the economy, you could also look at Home Depot and Lowe's, which report next week. With Home Depot, you need to see the big-ticket transactions over $1,000. If those are improving, consumers are feeling more confident in putting money into their homes for large renovations or projects. If they are declining, it means the consumers are, a little cash strapped and feeling like they can only really spend money if it's on an essential fix for their house. And then the next day on the 19th, you'll be able to get a more insightful look on whether or not consumers are hiring professional services or opting to do stuff more DIY when Lowe's reports and gives us numbers on their Pro Rewards program and their commercial accounts. Home Depot has similar numbers, but Lowe's tends to have a more DIY consumer base, so they're a little bit more accurate when being able to tell where the consumers currently at with where their home projects are. And then to wrap up the week, we have the manufacturing index that comes in on Friday. While the producer price index and the manufacturing index sound like they would measure the exact same thing, the producer price index looks at the actual prices of stuff that manufacturing uses. The manufacturing index indicates whether or not we're producing more or less within the country. It looks at the size of orders and whether or not industry is hiring or firing people and condenses it into a number between 0 and 100, with anything over 50 indicating that we are manufacturing more and anything less than 50 indicating we are manufacturing less. Now, if estimates are correct, we are going to get a number of around 54 or 55. And if we get lower prices for producers while also manufacturing more, it decreases the need for a rate hike as inflation seems to be going to manageable levels. But that's all I got for you today. Thank you very much for watching. Subscribe, like, and I'll see you next week to see how this all turns out.